Welcome to Markets Now. I'm Michelle Rook with Randy Martinson of Martinson Ag. Grains are mostly lower here this morning with the exception of HRW wheat. Livestock futures, cattle started out two-sided trade, but right now we're seeing a little bit of momentum to the plus side. Hogs are lower. Okay, Randy, let's talk about the grains. We had nice performance yesterday in the market. Not a lot of follow through, and it's really all about tariffs, isn't it?
It is. I mean, today's tariff day. I mean, it's the liberation day as well. Trump is calling it. So the market is certainly focusing on what those numbers are going to be or what that's going to be here after the close. And right now, we really don't know what is in the mind of the administration because there hasn't been any leaks or any hints of what we're going to be looking at for tariffs. But I think the more important part is what's the retaliation going to be from the other countries. And right now, we've got a few that are stacking up and getting ready to announce theirs, the European Union and China. But, Canada, Mexico or Canada and India, they're still trying to make a deal before this is done.
Right. Like we said, it's all about the retaliation coming back at us. The president has kind of leaked a little bit about maybe 20% reciprocal tariffs, but I guess I got to say 20% across the board, that's not really a reciprocal tariff. When you do reciprocals, you go line by line, don't you, with each country? You don't just put a blanket across.
Exactly. And each product, because every product has a different tariff, like take, for example, up in Canada, we've got upwards to 250% tariffs on milk going into Canada that they put on us. So yeah, 20% really won't make much difference on that one. And same with EU with beef, they're up to 60%. So 20% wouldn't make much of a dent in what they're charging us. So I do think that it's going to be interesting to see where these numbers come in this afternoon.
Yeah, the proof will be in the pudding, and how we react to them will be interesting because we've never had reciprocal or blanket tariffs like this before. All right, so this is overshadowing some of the positives that we should talk about, or the things that have been lifting the market or did yesterday, weather being one of those, right?
Right. Weather is certainly helping. Right now we're seeing good moisture move across the northern plains. Southern plains are expected to get some pretty good moisture here in the next day or two. But then we're talking about warming up for the southern plains. And I think that's helping to support the Kansas City wheat market. We already know we lost acres, close to 800,000 from the January report. So wheat acres have been trimmed, not just up in the spring wheat area, but also in winter wheat. And it makes it more important to try to hold on to every one of those acres. And right now, with where the wheat market has been performing, it's not really doing a good job of that.
But they are supposed to get almost too much rain down in the Delta, the southeastern part of the Eastern Corn Belt, right?
Exactly. I mean, you're looking at the southern regions of the Corn Belt into the Delta areas are expected to get anywhere from 12 to 14 inches of rain out of the system, and that's going to slow down planting. Where that is where some activity has been taking place, especially for corn and some of the other crops. So that will slow down planting, and it might now start switching producers over to other crops once they can get back into the fields.
I was going to say 95.3 million acres. It's pretty hard to get that all planted if you can't get in the field.
It is. Mother Nature's still going to be the one who decides where the acres fall. I mean, USDA came out with their numbers, what they're expecting, but in the end, it's going to take Mother Nature to allow that to happen. And right now, we're seeing a snowstorm up here in the Northern Plains. If this only lasts this weekend and we start seeing improving weather, that will, get us into the field here by the end of April. And we could see that increase in acres here, but it's going to take some favorable weather.
Right. So corn seemed to put some weather premium in yesterday that we're taking out today, obviously. But we're also kind of watching parts of Brazil because the second crop, safrinha corn, some of those areas are pretty hot and dry, aren't they?
They are, and they continue to see some issues. I heard reports of some of the areas in that Paranara and South where they've destroyed. Actually, one grower I know destroyed 30% of their acres because of poor stands and the fact that the crop wouldn't make it. So there is some concerns about where that second safrinha corn crop is going to fall into play.
Right. Soybeans have also, including yesterday, the 18 to 20 cent gains, some of that coming from lower acres, but also meeting between petroleum and biofuels groups. And it looks like we're going to get some higher renewable volume obligations. How important is that going to be for keeping the momentum going in soybeans and soybean oil?
Oh, that's going to be huge. I mean, look at what happened, with our exports and with, this little trade dispute with China with the tariffs, and soybean exports are kind of dwindling. So we need another demand source. And we've kind of relied on the biofuels to help lift us. Well, that's kind of waned a little bit because we didn't know where the Trump administration stood. Well, now this is certainly helping. And if we can see the renewable diesel fuel side increase from that 3.5 billion gallons up to the 5.5 or higher, that certainly is going to be that's going to do a lot of carrying for the soybean market.
Yeah, and I think it also helps ethanol. It looks like that. And, the USDA announced some biofuels infrastructure money this morning. So that's also, at least supportive, isn't it?
Oh, it's hugely supportive. I mean, right now we need to lean on the domestic demand as exports are going to falter here, especially if we look at these tariffs coming into play this afternoon. So we're going to have to depend a lot more on domestic consumption. And right now, that is the biofuel side of things.
Right. We are still kind of digesting Monday's reports as well. But I think the thing I want to ask you about is, if you look especially at quarterly stocks on corn, they were down quite substantially, over 200 million bushels from last year at this time. Do we see that reflected in the report next week, the WASDE report?
I don't know if we will next week. I think they're going to wait and see what kind of, what's going to happen with these tariffs that come into play, if it's going to slow down the demand on corn. I think if we don't see much of a change and we continue to see Mexico and others, and the exports continue to be fairly strong, I think then we start to see a little bit of adjustments will come in probably the May numbers. And I do think, exports have been running ahead for corn. We've been seeing, I think, feed demand's a little bit higher than expected because of the cold snap that we had. I mean, we went through quite a bit of corn during the cold weather, and also ethanol a little bit better. So I think if USDA will wait probably a month to see what happens with the tariffs, but I think we'll see that in May.
Right. Cattle back and forth early on, but now back to the plus side here. And really that market seems to be bought on every break. Do we go back and retest the contract highs?
Oh, I think we will. And when you look at the tariffs, that's actually friendly to the cattle markets because it's going to slow down supply and, tighten up our supply even that much more than what it is. Domestic demand continues to be good. So I do think we go back and test those highs. At some point, this market's going to break, and then, it's going to be impossible to know when. But right now, like you said, every break gets met with buying.
Well, and in the feeder market, it's just that the supplies aren't out there and the Mexican cattle aren't coming across as fast as we thought, right?
Right. And if if the tariff situation does escalate, it's likely we'll see, tariffs on the cattle, and it'll slow down that flow even more. So yeah, it's just going to continue to tighten up the supply of feeder cattle.
Plus screwworm, they just can't seem to get a handle on that or ahead of that in Mexico.
No, they can't. 2 more cases were reported last week, and that is really what's slowing things down. And you can see that in the placements in the border states in the cattle on feed report. They continue to be, quite a bit lower than average, and that will be the story that we see as we go through the summer too.
Right. Outside markets are seeing some risk off here today. Obviously, that's going to have a little bit of an impact on money flow too.
It will. And, the stock market's going to continue to see a little bit of pressure. Hopefully the dollar continue to be a little bit weak. That will certainly help offset some of the potential of any increase in tariffs. But yeah, those offside, gold continuing to push higher. That's hitting all-time contract highs, and there's money flow into that on the concerns of the economy.
You bet. A lot of uncertainty there. All right. Thanks so much, Randy Martinson with Martinson Ag. That is Markets Now.